Mortgage rates are skyrocketing. What's going on? Hey, this is Dave with the Bold Oak Realty Group. Welcome to my weekly real estate market update. Today's May 26th, going into the Memorial Day weekend. I hope you guys got great plans for picnics, hanging out with friends, going to the beach, whatever works for you. The next 3 days look like they're going to be beautiful according to the weather. Let's get into the Connecticut key market stats. We have 3,779 active homes on the market, down from 3,909 last week. That's down 130 houses. We had 273 new listings over the last 24 hours. When I saw that big jump in inventory last week, it made me pause and say, okay, what's going on in the minds of buyers right now, especially with interest rates going up? Since inventory has come back down this week, what I really think is going on is we are seeing softer demand because interest rates are up, but that demand is still stronger than the inventory that we have, the supply that we have. So that's kind of where we are on that. We had 2,611 closings in April. As of today, we have about 2,500 in May. I think even with the Memorial Day holiday, which takes a day off of closings, we'll still well outstrip that 2,600 from April. With the April sales, we have about 1.4 months of inventory, so we're still in a very low inventory position. So some key dates here. Mortgage rates, as I said, they've spiked over the last week. There's a lot going on and some not so good news on the inflation front. The headline most people are aware of is the debt ceiling debacle. My video last week covered the potential impacts to the housing market for the debt ceiling and if there was a default. The good news here is politicians are talking, and most likely a lot of the doom and gloom scenarios around a default are probably more negotiating points than anything else. There is some speculation we could have an agreement by as early as this afternoon. I'm not sure about that, but hopefully they do get something done and get it done soon. That would take a little bit of pressure off the mortgage rates, but unfortunately, the debt ceiling crisis is not the biggest driver in what we're seeing in mortgage rates right now. Big drivers include the improved outlook on banks. They're more stable, stronger than expected economic data, and certainly the Fed continuing to say that they believe that they're going to have to keep interest rates higher for much longer than people think in order to effectively fight inflation. The Personal Consumption Expenditure Index report, the PCE, came out today, and it kind of backs that up. This is the Fed's favorite inflation measure. Unfortunately, the bottom line is inflation is sticking around. We saw in April that inflation was higher than what was expected. This breaks a several-month streak of the reports coming out showing inflation less than what was expected. So because we're seeing higher inflation, there's definitely some concern. It does put some credence behind what the Fed is saying, that rates are going to have to stay higher to effectively fight inflation. And it also puts us in a position where the Fed has some more talking points about increasing the Fed funds rate by another quarter point. This could back that up. So bottom line, buyers and sellers, they're really not getting the spring market in Connecticut that they were hoping for. Inventory jumped last week, but it settled right back down. So what that means is that we're going to continue to have limited options, and there's going to be a lot of competition for those really nice houses that are out there. You know, if inflation continues, and hopefully this doesn't happen, but if there are some significant layoffs, you could see an increase in foreclosures, and that would help with the low inventory because you'd have more houses coming on. Unfortunately, that takes a lot of time. And just for perspective, the foreclosure rate right now is still well below the 2019 numbers and extremely below what we saw after 2008. Mortgage rates are also impacting both buyers and sellers. Buyers because of the increased costs associated with a higher interest rate. Sellers, especially those with a 3% mortgage, something like that, they're rate locked because they know that if they sell now in this high market, that they're going to have to also buy in a high market, and they're going to go from a 3.5% mortgage to a 7% mortgage. So this is why we're seeing limited listings come on the market, and you know it's a challenge that we're going to face for a while. The other options that sellers have is to rent. Again, unfortunately, a lot of people did that in 2020 and 2021. So there's a lot of rentals locked up with people waiting for that big market correction, which still hasn't materialized. So you could do a rental, but it's not, it's a little bit tougher now because there's a lot fewer options out there. Again, speculation, it's good since it can help us to prepare and think about how things can play out. But at the end of the day, we are right now faced with a very strong seller's market in Connecticut. Primary mortgage market survey, rates jumped to an average over the last week of 6.57 from 6.39. Right now, those mortgage rates are up over 7%. And as we're heading into the long weekend, this does not helped by the higher than expected PCE report. I expect to see the rates continue in that 7% range for all the reasons that I mentioned earlier. Well, that's all I have for today. Comments, questions are always appreciated. Hope you have a great weekend.